Right now, the global economy is facing immense challenges: rising debt, volatile stock markets, high living costs, and sluggish growth. Many are predicting potential doomsday scenarios like stock market crashes or even broader global economic collapses. These fears are real and concerning. But what if there's another scenario that could change the course of the future? One that few are discussing. An emerging factor that could alter the trajectory of markets, the economy, and humanity itself over the next few decades. Let's break down what's happening step by step. Global debt, which includes government, corporate, and household debt, has surpassed $300 trillion, according to the Institute of International Finance. This staggering amount is more than 350% of global GDP. To put that into perspective, the total value of all the gold on Earth is about $12.7 trillion, just 4% of global debt. In 2024, global public debt alone is over $90 trillion, with many countries struggling to service their debts as interest rates rise due to monetary tightening worldwide. For context, it's estimated that setting up a human colony on Mars would cost around $1 trillion, meaning today's public debt equals the cost of 90 Martian colonies. Corporate debt stands at nearly $100 trillion, while household debt hovers around $60 trillion. This overwhelming debt load has been the fastest growing sector of the global economy in recent years. The International Monetary Fund, IMF, has noted that the global debt to GDP ratio has tripled since the 1970s. For many, this is a ticking time bomb, with governments increasingly paying off debt by taking on more debt, a practice that would be deemed irresponsible for individuals but is considered business as usual for governments. Some fear we are spiraling toward a debt crisis where debt payments consume all government funds, leading to the collapse of programs or even the default of multiple nations at once, potentially triggering the largest global economic meltdown in history. However, what if this isn't the only possible outcome? History provides interesting lessons. Take the Roman Empire, which also faced immense debt during its rise. In fact, early on, Rome was burdened by debt from wars and infrastructure projects, and many families accumulated debt while soldiers were away on military campaigns. Despite these challenges, Rome not only avoided collapse but entered a golden age. Several reforms helped turn things around for Rome. One was the abolition of debt slavery, where instead of becoming slaves for failing to repay debt, citizens would lose their property to cover their obligations. While Rome's wealth grew through conquests, other policies were key as well. Emperors began gifting land to military veterans and even poor citizens. Imagine if today's governments simply gave people free land. Emperor Tiberius Gracchus took it further by redistributing land from the rich to those struggling with debt. His brother introduced further reforms, such as subsidizing grain prices and limiting the influence of wealthy elites on economic policy. These policies, combined with conquests and infrastructure development, helped Rome become the powerful empire we know today. Perhaps today's governments could also enact dramatic economic reforms to relieve debt without devaluing currency or endlessly printing money, which is happening now. Another crisis we face is the rising cost of living, especially energy costs. In 2024, energy prices have reached unprecedented levels, with natural gas prices in Europe up more than 300% compared to pre-pandemic levels. Some households now spend up to 30% of their income on energy, a figure that has doubled since 2020. In developing nations, it's even worse, with some families in sub-Saharan Africa now spending over half their income on energy. This energy crisis is reminiscent of Britain in the 1600s and 1700s, when the economy relied heavily on wood. As the British Empire grew, the demand for wood skyrocketed, leading to deforestation and surging wood prices. In response, Britain shifted to coal, which eventually led to the Industrial Revolution. This transition to a new, cheaper energy source lowered energy costs, boosted the middle class, and helped build the empire. Today, the world faces a similar situation, but there's resistance to expanding certain energy industries like oil, even if it could lower prices. Renewable energy sources like solar, wind, and hydro are growing, but they're not yet reliable or efficient enough to significantly reduce household electricity costs compared to fossil fuels. However, there are promising developments. In some heat waves over the past year, countries like Greece and Belgium saw up to 130% of their energy needs met by solar power alone. More exciting is the potential breakthrough in nuclear fusion. Scientists in the US have been making significant progress with nuclear fusion reactions, a process that's about 5 times more efficient than current nuclear reactors and produces minimal radioactive waste. This could revolutionize energy production, potentially reducing household energy costs by up to 90% in the coming decades. Imagine your electricity bill dropping from $100 to $10 a month. Innovation often bails out the economy in ways we can't predict. In the late 1990s, no one could have predicted how central the internet would become to the global economy, growing from just 1% of economic activity in 1999 to becoming a core pillar by 2014. Who knows? Nuclear fusion, robotics, artificial intelligence, or other innovations could usher in a new golden age of prosperity. In conclusion, while the global economy is in a tough spot, history shows that innovation and reform can lead to surprising turnarounds. There's hope that we might be on the brink of a new era of prosperity, just as previous generations have experienced.